Welcome to the Building and Growing podcast. We're delighted to have Ben Martin with us today. Welcome, Ben.
Hey, Lucas, how you doing?
Good. Thanks so much for joining us today.
No problem.
So Ben is a director of Pearson Ham Consulting Group. Previously was vice president at Dext. You've got a fantastic background, Ben, and so let me hand it over to you to do a bit of an intro to yourself.
Cheers, Lucas. Thanks so much. Intro-wise, I've got a varied background. I started out in banking 1994, which is like a long time ago. I started in NatWest.
Yes.
I was in the treasury management, and we looked at liquidity and capital,
Nice.
all these important things. I then moved through NatWest and went onto the trading floor in the investment bank and spent 10 years there on interest rate and foreign exchange rate management and derivative selling. And then I pivoted because I thought I need to get some more strings to my banking bow.
Yes.
And moved into business banking. So I spent a couple of years on the business banking front, which wrapped up about 20 or so years in banking.
Fantastic.
And then thought I needed something to do something new. So moved into, I moved out of banking and started my own company.
Okay.
Which was like a part fintech, part advisory company, and built out a few products there.
Yes.
Really focusing on helping SMEs understand their banking and understand all the macro environment that went around. Brexit was happening, so I kind of pivoted to do some Brexit tracker, and at the same time became a semi-professional athlete. So I did some really cool adventure racing in that time.
Yeah.
Watched my kids grow up a little bit, spent a lot of time with them, and then 2018 came along, and Dext picked up the phone. So I then worked for them for 4 years, up to VP Product. Had an amazing time at Dext. It was Receipt Bank, then it got renamed to Dext.
Yeah.
Got bought out by HD Capital. So we just went through huge scale, huge injections of pace from the new PE owners.
Yeah.
And I learned a lot. It was really, really, really good fun there.
Yes.
And then left 2022 and came to Pearson Ham. And helped buy a company, M&A that company, and build up that company where we are now.
Excellent. What a diverse career.
It is, yeah. Not sure how useful that is, but it's certainly diverse.
Yeah, no, absolutely. I mean, look, I think, from sort of investment banking to B2B banking to founding your own business, then working for a fast-growing startup, and then, the dynamic certainly changes when there's a cash injection from a PE firm, to now consulting post-acquisition. I think it's, very varied, and I'm sure there's going to be a lot of interesting war stories today.
Yeah, you learn a lot, and I think that is important. You might not get everything right, you might not get everything wrong, but I think if you learn and retrospectively look at what you did, how you can do things differently, how you can apply lessons from 20 years ago to now, because some of the folks, are a bit younger, is kind of what drives me and what pushes me on.
Yeah, fantastic. And look, I mean, I think it's worth us saying that, we met when you were at Receipt Bank or Dext. I was at Revolut Business. I think that
right.
B2B space, when you can find pain points and solve those pain points, it translates to real sticky sort of customer retention.
Yeah, it does. Sticky and retention, two really hard words to do in the B2B world, but you're also giving them a product that they really use. I think Revolut is a fantastic product. Been using it for many years myself. And Dext was a great product. Receipt Bank was a great product. So I think if you've got, I did a presentation recently on how you build out product. Well, you need to find a problem to go and solve.
Yes.
And it's not just any problem. It needs to be a reoccurring problem that is causing them issues in their daily lives. And I think those two products massively help in the B2B space.
Indeed, yeah. And look, I think it's one thing that has now really demonstrated itself as funding has sort of the funding taps have tightened. If you don't solve a problem which is a recurring problem, you don't have recurring monthly cash flow, and so you really see these startups that were a bit fluffy all falling away now.
Yeah, I think that dash to profitability, which was 2021, 2022, definitely last year, has meant a lot of the fintechs that were growing user growth and had great growth stories, but weren't focusing on profitability, really pivoted. Which kind of makes sense, and especially in a high interest rate environment, money is now just not free. There needs to be a return on it.
Yes.
I think a lot of new lessons are being learned, and there's some positives because you've got some fintechs out there that sit on massive cash balances. Suddenly they're earning 5.25% at the Bank of England. So even that is going back to my previous career. I knew a lot about that. And that's actually why I got looking to go back into banking, because what happened to SVB? It was actually quite a sound business,
yes.
Great credit, but it took the wrong liquidity policies and it blew up. So, there's a lot of lessons that get repeated, and it's interesting to see some of those come around again when we've got high inflation and high interest rates.
Indeed. I read a book, and I'll finish this before we dive into Pearson Ham, but it was called This Time It's Different, and it basically was an analysis of every single credit crisis for the past 700 odd years, and the mentality was everybody always thinks this time it's different, but it never is.
Not really, no. I might have to read that book.
I'll send it on to you. But look, Ben, tell us about what the Pearson Ham Group does.
Yeah, so Pearson Ham, founded 10 years ago by Tim Ham, the current founder and CEO, specialises in pricing. Pricing is literally everywhere. If you're buying something, you've got to transact over a price. So Tim realised there were some big partners out there, big firms out there, but equally many businesses weren't getting the kind of the consulting and the advice they need. So he set out to do that, and it's been hugely successful. If you travel, you're probably on a firm that we've helped with their pricing. If you're drinking a beverage or going into a bar, we probably help there. So they and we do a lot of advice on just the overall commercial model. How are you interacting with your customers on price?
Yes.
And then ideally we follow up with, and how is that changing over time as your users or your audience or your customers become more willing to engage with you, or less willing. So you have to involve the data. Data bit. So Pearson Ham does a lot of consultancy, but the reason I came in is they also have a big data firm.
Yes.
And that data firm or data element it's called market pricing, picks up a lot of data points that are very important around pricing. And then we don't need to consult on that. We then just provide that data anonymized and cleansed out to the bigger firms who absorb data but just can't gather it themselves profitably.
Sure.
So that's how I came into Pearson Ham.
Fantastic.
With my kind of product background rather than a consulting background.
Excellent. Yeah. So look, let's dive into the data within pricing for a moment there. So you mentioned that you're able to anonymize and package up some of that data and give it to a firm. Are we able to dive one level deeper into, say, an example of that happening?
Yeah, I was brought into Pearson Ham to look at the aftermarket side and how we can use data to help the aftermarket customers.
Yes.
The aftermarket, if you don't know, is really understanding the parts of the car that you fit, like after 3 years, when you don't have to go to the fully expensive, fully approved warranty. You can kind of go non-genuine. It's a huge market, absolutely huge, like £6-7 billion in the UK spent every year.
Yes.
The firm that we were really interested in managed to track all of these parts through from the supply to how they get to the garages. And we looked at the understanding of that and how you use that data in the marketplace and thought, that's quite hard for individual garages or individual distributors to understand. So we brought this firm which looks at the prices and the volume of a lot of the parts that get supplied into the market. We track like 1 million different SKUs.
Wow.
But what we really like about that is that you get the price and you get the quantity. And when you've got those two elements, you can then start doing a lot of modeling. If you just got price, you can have a good guess at what elasticity is. But if you've got, what your price is and what other people are paying for it and the change in volumes between those two, then you can start doing a lot of modeling. So that's when your data analysis and the results that you can produce become really, really attractive.
Fantastic, yeah. And so then would you be working with, let's say, the producers of those parts in order to say, hey, there's actually a revenue opportunity here for you?
Yeah, no, absolutely right. It's we call them the suppliers, and you've got OEMs and you've got sort of value suppliers. So we work with the value suppliers who can, put and fit any part on your car. And what is interesting is the breadth of those suppliers. So some are absolutely huge, multi-billion turnover, and some are doing 20 million because they just like windscreen wipers, or they just like suspension arms. So I've certainly got to know a lot about a car that I didn't know a couple of years ago. But it's them working with them and giving them the data in the format that they need. Some of the bigger guys just want like a flat file with all the information, and they can load it into their Tableau or their Focus. Whereas some come to us for, can you just show me the insights on my company and how I'm doing, and therefore what can we do to make a difference? And then a lot of it is new product development, which I think is really important. So it's what am I not selling that's hot in the market? And that is like gold dust to some of these manufacturers. Yeah,
indeed. And look, I mean, I think I'm just going to take a step back, because we're talking a lot about the data and how this can influence pricing and, for example, identify opportunities to produce new products. But if we think about industries like airlines and hotels, I remember when I was doing revenue management at British Airways, for example, like there were a whole number of factors that came into account in terms of seasonality, what percentage of the flight do we expect corporates to book, particularly in, say, business class. And when I was working at the Four Seasons as well, there was real-time sort of availability being managed and distributed through Booking.com and Expedia and direct channels and whatnot. So you've got companies in the travel industry that are essentially pricing in real time. What was the sort of, let's say, lag between you providing the data to these automotive companies and then them actually acting on it?
Yeah, it's a really good question and quite hard, because there's a delay. In the aftermarket, which is where the firm that I brought, it can be a 3 to 6 month delay, because some of them have got supply agreements that they've nailed down. Often the garages and the distributors work in like a buying group, like a big collective. So that's all sort of ironed out in quite ahead of time. So it's not as to your market, it's a rapidly moving market. But we can still give the information, because product development takes a bit of time, and it's useful to understand the market, especially when the market is quite opaque. So it's there aren't barcodes out there. There aren't huge suppliers doing what we do. So we can still provide useful information, albeit it might take a bit of time for them to feed through. But interestingly, the other side of what we do is in the insurance market, we provide to all the insurers that you'll know for pet and for home and for motor, about to go into travel. Daily prices on how that insurer is looking at a raft of standardized policies, and they act on it daily.
Wow.
So we almost, to your point, do daily interactions, and then we do give them the information, but they can't act on it for 3 or 6 months because of the way they can distribute through the supply chain.
Yeah, fantastic. And look, I think it's excellent just how data is being used more and more in terms of making decisions. I know a couple of weeks ago on the podcast we had somebody from Flock, Adib from Flock, who spoke about telematics and how that was being used to price insurance. But I guess that would then be used to price an annual quote, whereas in the future, the more data that exists, I mean, I would think that we're going to eventually move to price insurance in real time or daily. But I don't know if you have a view on that. But
I think it could happen. Do consumers want that? And there needs to be some certainty in what they do. But you've got the new insurers like Carve who will give you insurance per hour. So yes. I think for if there's a problem, I think product is great about going and finding that problem and then giving the solution. Sometimes you see products that are a great solution, but they're missing the problem.
Yes.
To go and find. So I think it'll be interesting to see where we go on more often than annual pricing for things like insurance.
Yeah, fantastic, excellent. Well, look, Ben, that's been a great deep dive into what Pearson Ham do, what you've done there, certainly post-transaction, post-acquisition, and I love the insurance example. I could discuss InsurTech, for days. But you've touched upon the fact that your focus has been building products and products ops. So do you want to tell us a bit about why that's important?
Yeah, I'd love to, actually. Product ops, I think, is a relatively new kind of term and sometimes misunderstood through the industry. Having set up a product ops team at Dext, I've come to realise just how important it is, especially if you really want to scale.
Yeah.
And to understand sometimes the lack of understanding around it. I originally called it commercial product. So we just thought it was about getting more return from the R&D team.
Yes.
But actually it's not. Product ops is about coordinating the whole company. And I think if there's two lessons I've learned on how to run a really good product ops team, either small or really, really large, it's really focus on the communication and then really look at the roadmap.
Yes.
Communication, why? I think R&D teams sometimes find it hard to communicate why they're building stuff, why their roadmap is there. And then sometimes they have to defend it. And sometimes they need to change it.
Yes.
So you've really got to engage with the stakeholders. And that was a huge lesson at Dext, where I think towards the end of my time there, we certainly were engaging with the sales a lot more, which means they were selling stuff they wanted to, and we were building stuff that they could sell. So it was a really good two-way interaction. And we were making a lot of the R&D team think more about the commerciality of what they were building, which then kind of pivots to the roadmap, which I think is a really secondary important one, where we need to be not questioning why the PMs are building stuff. They're the owners of what they do. They understand the market. It's really about saying, okay, well, why are you building that over suggestion B or suggestion C? Okay, You're going to go with A. When are you going to do it? How long is it going to take? What does success look like along that journey? What are the milestones? We've got some battle scars, as you mentioned earlier, on building out product that just didn't work. Well, it worked, but it didn't solve the issue that we thought it was, and we kind of rushed to productionalize that. And I think if we'd had a stronger product ops focus, we would have sort of made sure to say, hang on, we didn't hit that milestone. Right, let's go back to the drawing board and understand why, rather than just saying, I'm sure it'll be fine in the end. So, for me, a really strong product ops team has got great communication cross-functionally over the org, really important in bigger organizations, and it really talks about the roadmap and actually using data and softwares like Segment to really understand the user journey through these new products and the old products to really understand what is happening, which is why I love data, because you can answer a lot of questions on data.
Indeed, that's right. And look, you mentioned cross-functional, and so I want to jump to an example from Revolut where there were cross-functional teams wherein, let's say, the engineers and the product owner and the data person and the salesperson or BD manager were all incentivized by the same goal. So they were all incentivized by that final commercial outcome. So a question I have is, you mentioned the R&D teams that are often working on new technologies and such, some of which may be wanted by the sales team, some of which aren't. How do you incentivize those R&D teams to deliver the right commercial outcomes?
We could talk for hours on this. I think it's one of the closest things and the most enjoyable things that I do, because I've come from a very commercial background, and a lot of PMs haven't had the benefit of 20 years in investment banking and business banking. But we do need to make sure that we're all pointing in the same direction. And actually that direction probably can be twofold. One is end revenue goals. We have to make money. We talked about it earlier. We all need to make a profit. These days, just sort of accumulating losses is we need to be avoided. But I think product managers struggle a bit on that, because I made the product. Did sales sell it, or wasn't the product good enough so sales didn't sell it? So that's why I think product ops helps, and we can talk to the PMs about, well, what are your user outcomes actually? What are the users going to do with it? How are they going to use it? How often are they going to interact with it? Are they going to use this to upsell themselves or cross-sell themselves? Is the platform strong enough to make sure that cross-sell happens sort of self-service rather than human-assisted? So those things are directly helping, or maybe indirectly helping your direct cause, which is revenue. So I learned it was really hard to put revenue goals on product releases, but I think if you focus on the user outcomes, and those are really, really well thought through, then the user outcomes deliver your revenue goals, but probably indirectly. And I think product teams and R&D teams can think clearer on user outcomes, which are measurable. There's a click, there's a push, there's a button, there's a transition through the product, than necessarily the revenue, because revenue is talking to your chief revenue officer and understanding how the sales are doing it and how it's being sold. But we can't operate in a vacuum. So I think user outcomes and financial goals need to get married together. And that's what a great product ops team can do.
Yeah, excellent. And look, I just want to jump down into the cost side, because I know when I was buying software, for example, you mentioned Segment, which is a customer data platform. Yep. When I was looking at that at Getir, as we were adding on different services in Turkey to build out that super app, one number which was increasing more and more and more was the throughput. And so, does product ops also consider things from a cost perspective in terms of, all right, what cost impact will this have on our customer data platform and tech stack?
Yeah, it does. That said, I think we're dealing with humans in the R&D world, so we tried not to make it really too heavily focused on cost, because suddenly looking at time and clicking in and clicking out and time cards, like we're not interested in that, guys. Yeah. But I think as you build out a better understanding of your customers through it, and you're pointing to all of these user outcome goals, you need software to do that. And software adds up. Segment, I think, is a great tool. Optimizely, another A/B testing tool. It is a great tool, but you don't just plug it in and walk away. It takes a lot of time to make sure it's properly tracked through the journey, both of those. And then you've got a culture of using the information and the data points it produces back into the roadmap to help you build out. I think, I have seen companies that have plugged these systems in at, significant cost, and they're not being used. Mainly because things are focused on revenue, and these things aren't pointing directly to revenue or not highlighting the journey to revenue. So I think product ops is, and we had a chunky tens of million pound R&D budget, spent a lot of time making sure that we were having the right people, back to like creating the right squads. To make sure that everything was being built at the right cadence and relying on the software. But software can become, a multi-million pound cost in something the size of Dext. And even at Pearson Ham, it's about a third of our overall tech costs, salary and stuff. So it can add up, and cloud software adds up really, really quick. Part of I think a good product ops team is just questioning why you've got that software. And you mentioned cross-functional work. It's actually working with your business partners in finance to make sure that we've got the budget for this, and we're not just continually spending it because it's there and it's nice and shiny. So there should be a lot of focus on cost to help the business move forward.
Indeed, I think unused sort of SaaS seats are a massive cost contributor for many organisations. We did a podcast with Matt Hicks from Vertice, and they have a huge amount of visibility across organisations, and certainly confirm that there are a lot of unused seats out there in the market, contributing to some pretty decent profit margins in Silicon Valley.
Well, it is. At the start of this, we talked about retention, right? But that is a retention problem right there, because if you've got a product ops team like me that are looking on how many spare licenses have we got and how long have they been spare, I'm going to chop those, as soon as we can. So that's why I think even those big Silicon Valley companies that might be making a lot of money now on high user licenses do need to look at their own usage, as we did at Dext and as have done elsewhere, because things change. And suddenly, we saw in COVID, everybody started cutting, software costs. I think they're back up to normal volumes now, but I think you've got to be really close to making sure from a retention point of view you're not making too much money now at the cost of money in the future.
Indeed, and I think gradually what we'll see evolve is a move away, let's say, from SaaS to more consumption-based pricing, which ultimately is going to be what's fairest, for businesses. It's in finance, you've got treat customers fairly regulation. In SaaS, it's still kind of unregulated, but I'm sure that we'll eventually get to something more consumption based.
I think you will. I think we will. And when I was at Dext, as well as product ops, so I went into pricing and packaging. Actually, that came first, which then moved on to commercial product, which moved on to commercial product ops. And I think just understanding your commercial model, which is what we do at Pearson Ham a lot, is really important, because you make decisions on what is going to be the best outcome, and if your user isn't up there quite high up in voting for the best outcome, I think longer term you're going to suffer.
Yes.
And at Dext we did a huge amount of work on, do we want to sell just this like big bundle of all you can eat and the price never change, or do you want to go to your consumption model? We were dealing with accountants and bookkeepers, so it took a bit of time to get that message out, but I think both for Receipt Bank Dext and our shareholders, and ultimately for the customers, I think the consumption model is a much fairer model. It just takes some time to get there, and I've got the battle scars on getting that as well. I just did an interview yesterday actually on something around, how do you move from big non-bundled all-you-can-eat pricing to a more refined consumption model?
Yes.
And so it's surprising the transition and the steps you need to make, but it's all good fun.
Indeed, yeah. And look, I'm a user of Dext. I think it's a fantastic package. I know a lot of people that use it for, businesses from small to quite large ones. But are you able to talk us through, sort of your experience there when you were scaling it?
Yeah, absolutely. And again, I could talk for hours on it. I think if the business is scaling, it needs the infrastructure to scale. And something we learned relatively early with, and I worked with some really good chief product officers, was how do we invest in the scaling of it? So it's the segments, plug the segment and that sort of stuff in early. Understand your R&D teams, which squads are doing what, and then make sure they're not having bottlenecks or they're having dependence on each other, so you can continuously deploy a lot of stuff. I think then going to scale is, are there other companies that are very complementary on what you can do, and we found two. So it was great. So that I was part of the team that M&A'd, two companies into Dext. And the lessons learned there are, make sure that if you're looking to upsell and cross-sell, it's pricing stuff that I'm talking about again. It kind of runs through my career. There's no barriers, which means you need a really cool platform, and the customers need to know what jobs am I doing on product A, which was like the Receipt Bank, which is called Prepare Now, to moving on to what jobs can be done in Precision, which was the first company we brought, to what jobs can be done in the e-commerce offering. So making them aware of the solutions you've got in your stable of products, but making it really easy for them to access. I mean, it sounds obvious, but we come from a product background. It's really hard to do, because you've got three different platforms written in three different products written in three different codes with three different dev teams, in different parts of the world, and in even signing on with a consistent, username or email address becomes quite a challenge. So how you scale is, if you build it in-house, or you go and buy something else. If you're buying something else, you really got to think about how is it going to get integrated. So a lot of my work at Dext and at Pearson Ham has been what we call PMI, post-merger integration, which I loved. I loved that the most, I think, because you've got people, you've got processes, and it's about making sure that the people and the processes and then your plans are fitting together, and it's delivering the outcomes that you got excited about when you wanted to go and buy the firm.
Fantastic. And I think, that's a great little summary of, what are the, say, top three post-merger challenges. The integration, the people and the processes, you carved that out well.
Yeah, thanks. No, you can't. I just, again, battle scars, right? Done it twice, done it three times actually now at Pearson Ham, and it's always different. I think we underestimate the people side of thing, but once you really develop into that, you just find some great people out there that are doing some wonderful jobs. You're like, wow, you could do that over here, and it would be like 3x in value. Come on in. So it's just really exciting.
Fantastic. And look, Ben, we've had people on the podcast before who have come from private equity backgrounds, and they may have been purchasing the companies. You've been in a company which is, sold, to a PE firm. What would you say the biggest challenges are as an operator after a PE investment?
Yeah, that is a great question. the biggest challenge before is making the deal happen. And for my role when HG came in, it was about our roadmaps. Do our roadmaps make sense?
Yeah.
They did. They were great roadmaps, and we could justify what we were doing and why we were doing it and when we were going to do it. And we had a bit of pedigree on delivering on time. I think post transaction everything settles down a little bit, and then the pressure comes.
Yes.
It's coming. You don't quite know what form it's going to take. So for me, a big lesson is making sure, again, it goes back to the infrastructure and it can handle that pressure. Think of a big building, a lot of pressure coming in on the top, and that just feeds through to the foundations.
Yes.
So I think in future roles, and I'd love to be part of that again, I want to make sure that kind of pre-transaction, we know what the pressure is going to be like, where it's going to come, and we start directing time, resources, thinking, all that stuff on kind of fixing where we think it might crumble first.
Yeah.
Because once one part goes, it's really hard to maintain a united front. And then you start slipping on user outcomes, your revenue starts to fall behind, the PE firm becomes ever more interested in your business, and they're great to work with. They're probably the bunch of cleverest people I've ever been around.
Yeah.
But there's no such thing as a free lunch. So
That's right.
It's pretty tough.
Yeah, fantastic. And look, Ben, at the beginning of the conversation, we spoke a bit about investment banking, the FX markets, interest rates, business banking. And it's quite timely because on the 3rd of October, so next week, we'll be releasing a podcast on emerging markets, FX, and liquidity issues there. So, you exited from the banking space about 10 years or so ago. What have you seen change since then?
Yeah, what have I seen change? Not a lot and lots.
Yeah.
I think not a lot. You still got these big banks, the Barclays in the UK especially. You've got NatWest / RBS, you've got Lloyds, you've got Barclays, HSBC to some extent, but they might be sort of moving sort of their gaze slightly more globally. They have gone through a huge upheaval since the financial crisis, like 2008, 2009, and I think they're now really pushing on profitability. I think their digital teams are really speeding up, and they're doing a lot of work on moving some of their systems to the cloud. Not all of them, but they've got a lot of systems to move. In terms of many things have changed, I think the neobanks, the fintechs, the Klarnas of this world, the Shawbrooks, the Alicas, they're all understanding what they need to do.
Yes.
And I think they wanted to be very much sort of disrupting into the banking industry 10 years ago. The ones that have survived are now probably need to be a little bit more like a bank, because we've seen what happens to SVB. Boom, that happens really quick. For reasons I think are probably avoidable, but you need people that we were talking earlier going through the full circle of banking crises and economic crises. A lot of the same things happens, which is often your capital structure and your liquidity. These things don't change. Banking has been around for many years. And I think a lot of the fintechs, the neobank, the challenger banks are making sure they've got a certain amount of scale, which means they can put the people in, kind of with my experience, who've been around and done it, and can work with the product teams and the dev teams to make sure that you're building the right product. I was chatting with a friend of mine, a really good CPO at one of these banks, and they are building out 2 sets of products, one for customers and one for colleagues.
Oh, wow.
And I thought that was really neat, because previously I've really been focusing on making sure dev teams are built out and R&D teams are building out for customers, revenue, all that. These guys are actually thinking about, but we're a kind of people business, so let's make sure that our colleagues have got all of the right systems.
Yes.
Ability to use data, to understand pricing decisions, to be quick and nimble with their customers. So I love that quote. Customers and colleagues. So I think that's what's probably changing a lot in the challenger banks and the neobanks.
Yeah, fantastic. And I think there's a great case study from Airbnb about some of the products that they built internally for, say, their data teams. I think Uber did the same. Airbnb built this data university, which was fantastic, because not only did they build tools for their colleagues, but they provided them, let's say, a framework to ensure that tool adoption was quite high. But I want to jump back to Silicon Valley Bank for a moment, because one of the quotes I read during that crisis was the fact that, although in the past other, let's say, financial institutions had been in a similar situation where, they had, made some, let's say, liquidity decisions and had started to be or having those decisions bite them back, because SVB was a digital bank and everything could happen so quickly. A bank run in 2022 or 2023 occurs at a much faster rate relative to 20 or 30 years ago. And so do you see the fact that everything can happen so quickly now as being a bit of a risk for banks?
Yes and no. I think digital banks and traditional banks will experience a run on deposits if they've got a big building or if it's all digital. If one happens, two happens, three, it's a domino effect. So I personally think that nowadays you can get your money out pretty quickly, whether you have to queue, whether you have to go to your online banking, or whether it's a fully digital bank. I think you've got that risk. So therefore you need to address the funding. Do you have it all in instant access corporate deposits that will just go quickly? Can you make sure that those deposits, either customer or corporate, are protected by government schemes? I think that's a big thing that Bank of England is looking at right now. I think was really interesting with SVB, which got me interested in banking again. I thought I'd left it 10 years ago. I'm now looking to go back into it. Is that they were investing in really high quality assets, but because of the mark-to-market principle, the value of those assets shot down when interest rates went up. So they couldn't sell their portfolio without incurring a 20 whatever percent loss to fund the deposits that were going out. So that would have been completely avoidable if they'd done some proper treasury management on it and had interest rates like interest rate derivatives that go up in value. So for me, it was not entirely necessarily how they structured their overall liquidity. It was about considering events that hadn't happened in 10 years, but hey, as interest rates go up, well, interest rates do go up. It's been a long time since they did, but when they did, they went up quick, and the chain of events that happened, COVID and the war in Ukraine and the supply and then inflation issues made that journey really, really quick. And I do think the push to marking a lot of assets to market is a bit of a contributor to that. But yeah, for me, that's what got me interested again in banking. Because 20 years I was helping NatWest with a lot of this stuff, and running these positions centrally. So it seems that collectively a bit of a brain meltdown in not structuring what they should be doing. I might be wrong. I'm happy to be called in by listeners, but for me it was like, oh wow, let's see what banks that I could go and help are doing, just to get that collective memory going again.
Fantastic. And look, do you have any views of, let's say, the FX market? I guess since you left banking, there's been a big push, particularly on main currencies, and pushing down to the interbank rate, driven by companies like Revolut, TransferWise, Airwallex in the B2B space. Do you have any views of what's in store for FX?
God, I don't. I think the reason Revolut and Wise has been so popular because they have access to the interbank rate. The advent of digital, on our phones, we can get the interbank rate within 10 seconds. 20 years, 15 years, even like 10 years ago, a lot of big corporates didn't have access to being able, even small corporates, right? Couldn't go and buy, €1 million without paying a really, really big spread. So I think that market is opening up. There's a lot of technologies and service providers who are probably 10 years old now who are doing a lot of that. So I don't necessarily see that changing a huge amount. What would be great if we saw more companies from a foreign exchange point of view do like hedging, locking in forward purchases, forward sales. Whether the banks want to do that with unknown credit risks on small companies, because they can get very expensive if it goes the wrong way. I think the foreign exchange market is really interesting. I think actually payments is now interesting as well as the foreign exchange market. I wish I got deeper into payments 10 years ago, because just the advent of all the new firms coming out and buy now pay later type stuff. The embedded finance, I think that's going to be probably really cool to watch in the next 5 years. I think the foreign exchange was uncovered by Revolut, and those firms have pushed that a bit. But yeah, the embedded finance and how companies are funding themselves, maybe just moving away from a credit, personal credit card, I think could be a really interesting space to watch.
Fantastic, excellent. Look, Ben, we normally finish up with key takeaways, but before we go to that, is there anything that you want to discuss with the audience before we go to your, let's say, ultimate wisdom?
I'm not prepared for that one. What would normally people say?
In terms of, any closing remarks or the takeaways.
Okay. That's a great one. I mean, we talked about Product Ops. You know how excited I am on Product Ops. So I think if companies are looking to scale, they've got multi-million, if not £10 million R&D expenditure. Get a really good Product Ops team in. Start that early on, and really grow into using them to make the really good decisions.
Yes.
And then use data all along the way. Be it if you're a pricing firm, be it if you're providing solutions to accountants. Just use the softwares to provide breadcrumbs to that customer journey. Really focus on the customer journey, and I think it might take a while, but you'll see really good results from that.
Fantastic, excellent. And look, Ben, one sort of more personal question. You've been one of the people in product who's really been able to, let's say, climb the ladder. Holding director and VP positions. From a personal sense, what has helped you on that journey?
Wow, that's a great question. What's helped me on the journey? I've had some great managers. I've had some great people I've worked with, really, really great people. Dext was a bit like Revolut, I think, a real hotbed of people. And it's interesting to see they've all spread out a little bit now. Indeed. And I don't go 10 days without seeing somebody on like LinkedIn, like pick up a really new cool position. So I think absorbing working with these really talented individuals, to some extent I came from a very different world, so they really helped my journey. I think they saw in me somebody that had other skills they wanted to pick up, all this banking stuff. So that mutual exchange of ideas is something that I think really helped. And gosh, I'd love to do it all over again. Maybe I will. So that would be my parting.
Fantastic.
My parting comments. Process and people.
Excellent. Well, look, Ben, thank you so much for joining us today and for sharing your wisdom with us and the war stories. And we're excited to hear what's up next for you in the latter parts of your career.
No, great. It's been wonderful. Please invite me back.
Excellent. Will do.
Super. Thanks, Lucas.
Thanks, Ben. Thank you.
Cheers.